Good afternoon, you're watching Midcap Radar here on CNBC TV18. We come to you live from the CNBC TV18 Motilal Oswal studios. I'm Hormaz Fatakia. With me as always is Vivek Iyer. Some choppy moves, Vivek, over the last few minutes, but still holding on to some bit of green on the screen.
That's right, Hormaz. Good afternoon. And it's green on the screen. The mid-caps and small-cap end of the markets faring slightly better. And the market breadth, advance decline ratio, is actually quite good in favor of advances. We have quite a lot lined up on the show. Let's start off with the top headlines. Markets in the green, but off the highs at the start of the trading week. Pharma, healthcare and financial stocks lead. Mid-caps relatively perform better. FMCG continues to trade under pressure.
Ola Electric skids more than 7% after vehicle registration agency Rosmerta Digital Services has sued the company in the NCLT for defaulting on payments. Ola has strongly disputed the claims.
IT sector under pressure after Citigroup plans to reduce dependence on external IT contractors to 20% from 50%. LTI Mindtree loses over 3%. Persistent and Emphasis also under pressure.
Gold financier Muthoot Finance is up almost 4% after gold prices touch a record high in the international markets to cross $3,000. The company's gold loan AUM has also crossed the 1 lakh crore rupee mark.
End of 3-month share lock-in period sends stocks of Inventress, Knowledge Solutions and MobiKwik under pressure. International Gemological Institute falls as 3-month lock-in period for IPO investors is set to end tomorrow.
Yeah, and a lot of these shareholder lock-in stocks have been bearing the brunt in today's session. MobiKwik is down below its IPO price now. IKS too, as Vivek just mentioned, is now trading at the lowest level post-listing, somehow managing to still hold on to the IPO level. 13% lower now on IKS, 14.30 on the stock, and MobiKwik too has seen a fall of almost 65% from its post-listing high, which was close to 700 rupees, and here the stock now 8.5% lower at 250. A lot of the names on the broader markets are in focus, with the stocks like Hitachi Energy, Karur Vysya Bank. Some of the smaller banking names are making a bit of a move in today's session, 5% higher on Karur Vysya Bank. That is a stock that is doing well for itself in today's trading session. At the highest point of the day is Karur Vysya Bank, 196 on the stock. But there are plenty of other movers in the broader markets, and Vamakshi is joining in from the other side of the wall today to take us through just that. Vamakshi, good afternoon.
Well, good afternoon, Hormaz. Last week was not such a great week for the mid-cap index, and as of now, it is off to a decent start. Let's look at some of the stocks that are actually contributing to the gains that we're seeing on the index today. LG Equipments, that stock made a 52-week low in early March, and since then, the stock has bounced up very strongly. Today, it's up nearly 7.67%. We also have KEC International in focus after the company won orders worth 1,267 crores. Hitachi Energy has been declining in the month of March, but today the stock is actually up nearly 5.5%. We also have IEX. The stock is attempting to recover the losses that it saw in the week before. Agrochem stocks as a theme are also flying away in trade today. We have Coromandel International. The stock is up nearly 4%. UPL, Chambal Fort, as well as Dhanuka Agritech are some of the counters that are holding with strong gains in the trading session today. On the flip side, we also have some of the top losers in trade today. That includes First Source Solutions. The stock has been declining for the 7th consecutive session, and so far the stock has lost nearly 23%. JM Financial is another such counter, down nearly 50% from the highs made in October. Happiest Minds too down consecutive for the 3rd trading session, and GR Infra on the other hand today down and out in trade, but has been declining since December, down nearly 45% since that month. Lastly, let's also focus in on some of the stocks that are in focus on the back of the shareholder lock-in ending today. That includes MobiKwik, IKS, Sai Life Sciences, as well as EMS. All of these counters are declining in trade today.
Thank you so much, Vamakshi, for joining us and giving us a sense of what exactly is transpiring as far as the broader end of the markets are concerned. Well, moving on, let's now welcome Ajit Mishra from Religare Broking for a technical check on the market. Thank you so much for joining us, Ajit. First up, give us your view on the indices. Where do you see Nifty and the Nifty Bank headed from here on?
Yeah, good afternoon, Vivek. So, Vivek, last week also we saw that the struggle continues around the 20 EMA when it comes to Nifty and Nifty Bank Index. which is currently around 22,600 mark and 48,600 mark in Nifty and Banking Index respectively. And we are seeing a continuation of the move in today's session as well. So I believe that this consolidation, once we have a decisive break above 20 EMA, would subside the pressure and trigger the next directional move towards 23,000 mark and probably around 50,000 levels in the banking index in the coming sessions. But as of now, staying stock specific is something which is a prudent approach because the lower band is still around 300, 400 points away from the current area. The risk reward is not favorable if you're considering fresh long in the index at current levels.
What about specific stocks, Ajit?
So, see, buying strength is the only option that we have currently, considering that we are just seeing a recovery. It's not a reversal confirmation yet. The Chambal Fertilizer is one such stock which is quoting at record highs. We have seen a fresh breakout from the consolidation range. The price pattern combined with volumes all are indicating that 610 is something that the stock might test in the near future. The 565 should be your stop, and you can go long in Chambal at current levels. Another stock that we like from the private banking space is ICICI Bank. The stock is currently retesting its previous swing high. And the way it is outperforming within the sector, we expect this outperformance to further strengthen with the recovery in banking. So 1310 is what we are eyeing in ICICI Bank. 1250 should be your stop loss.
Thank you so much, Ajit, for joining us, giving us a sense of the markets, the internals as well. I'll just stock-specific recommendations. Let's now slip into a short break. We'll get him on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Midcap Radar. Well, some good news as far as cement stocks are concerned. Remember, last week on the back of there being a levy on mined limestone as far as the Tamil Nadu government was concerned, you saw significant selling pressure across a lot of the mid-cap cement names, especially companies with exposure to the South Indian market, names like Ramco Cement and Dalmia Bharat. These stocks saw significant selling pressure last week, but today Ramco Cement is up 3.5%. Dalmia Bharat too is doing very well, up over 3%, that particular name as well. The other stock that saw significant selling pressure in the week gone by was PB Fintech on its foray and going ahead and putting in some investment as far as the healthcare arm was concerned. Today, Policy Bazaar has rebounded quite sharply, now trading near the day's highest point. A couple of other stocks that are doing very well. India Energy Exchange, IEX, today that particular stock has bounced very sharply, up close to 6% in the session today. IEX, and remember, all of the exchange stocks in today's trading session are doing quite well. BSE, Hormaz has been highlighting the UBS initiating coverage report on that particular name. Stocks doing quite well, cooled off a little bit, but still up close to 1%. Remember, BSE is currently trading in the F&O band, so you cannot take fresh F&O positions as far as BSE is concerned. But the other exchange stock that are doing quite well is also MCX. So multi-commodity exchange too today seeing quite a bit of a bounce. The other stock that saw significant selling pressure and that has seen a bounce today is Info Edge. Naukri, that particular stock too, up over 2% in the session. But one sector and one stock in particular that's not doing well is the mid-cap IT space, and within that, LTIMindtree is under significant pressure. Rima is here to tell us why.
Thanks so much for that. So we picked up from a TOI report that Citigroup, the large global banking giant, is planning to reduce its dependence on external IT contractors, as you correctly said, from 50% to 20%. Instead, what they want to do is beef up their internal tech team by hiring more. Currently, they have 48,000 employees on their IT payroll. They want to increase that number to 50,000. The key reason for this shift in strategy is for regulatory reasons. They want to control their data, so data governance, risk management, fraud, etc. And in the past, just in the last 12 months, the company Citigroup has had to pay certain penalties for not adhering to the data governance standard. So that's the key, story that we picked up from reports, that they want to reduce the dependence on IT contractor. Now, why LTIMindtree? Because Citigroup is one of the top 2 clients of LTIMindtree, so it could potentially get impacted. But also other IT companies, considering how large Citigroup is. Even analysts told me that other IT companies like Infi, TCS, Wipro, all do work for Citigroup. Here, the only thing we need to know is whether they plan to reduce it depends on external vendors or external subcontractors. If it is just subcontractors, then the impact may not be so much. If it is reducing dependence on external IT vendors, then there could be some consolidation. Some IT services companies could lose work. But what could mitigate the impact is that point that the internal team, tech team, is going to go. The headcount is only going to go up by 2,000 employees. So in that sense, it may not be very significant, but there is potential negative news for now. The street is a bit worried. Back to you.
Thank you so much for that, Reema. In fact, the IT index and especially mid-cap IT stocks continue to remain significant drags. But one particular stock that I've been focusing on and that's doing quite well, especially as far as the broader end of the markets are concerned, is actually KEC International. Remember earlier today, we highlighted about how the company had gone ahead and given an update to the exchanges regarding how exactly they had received orders, and also they had given an indication as to what has been the growth outlook or the order inflow growth that the company has seen. Company secured new orders of over 1,267 crore. This is across businesses, and one big order coming in as far as power grid transmission lines are concerned, and both 800 kilovolt HVDC as well as 765 kilovolt transmission line orders. This is coming from power grid. Supply of towers, hardware as well as poles in America is the other set of orders that they are received from the Americas area. Hormaz, what is interesting to note is that YTD order intake now stands at a little over 23,300 crore. At the start of the year, the company had indicated that they are likely to receive order inflows of close to 25,000 crore. This is an approximate figure, but so the company largely on track to go ahead and meet its FY25 order inflow guidance. And along with that, that's quite commendable, especially given the fact that a large part of H1 didn't see much trending happen on the back of election-related activity. On the back of that, KEC International likely to meet its guidance. Good order inflows coming, stock up by almost 6%.
You take any positive news as it comes, right? Considering the market that we are in, and any slight bit of good news is being received very well. KEC International being a case in point, almost 6% higher than 710 on the stock right now. The other stock, though, that was supposed to receive order inflows of 25,000 crores in this financial year, and the street is still expecting that it would happen, is BEL, Bharat Electronics, and that is also off the highs of the day in today's trading session. But most of the brokerages that have come out with notes over the last few days and in the last week have expressed confidence that BEL is in contact or is in negotiations with a lot of these order givers, and that in the next 2 weeks we will see orders of anywhere up to 8,000 crore rupees now for the company to meet its FY25 order inflow guidance. We take a short break, but before we do that, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app with instant access to breaking news, in-depth articles and financial world updates at your fingertips. You can download the app from the App Store or the Google Play Store, or even scan the QR code that comes up on your screen in just a bit. That's the QR code that you need to scan. We take a short break. More on the other side. Stay tuned. Welcome back. Is still holding on to some of those gains, but some of those movers in today's trading session, Vivek had just highlighted BSE earlier in the show. It's off the highs of the day, but it's faced significant drubbing at the hands of the street from its highs, the highs of around 61.33, and since then the stock is down almost 50% from those levels. And it's after this fall is when UBS has now gone on to initiate coverage on the stock with the buy recommendation, a 53.50 price target, expecting a potential upside of 37% from current levels. What they're saying is that scaling up of the options turnover is going to be a key driver for BSE going forward, and the fact that it has diversified revenue streams, that is a positive, and its operating margins are also likely to improve going forward. That is another positive that UBS is highlighting for BSE going forward. Now, the current valuations at around 33 times 1 year forward price to earnings, that is around an 11% premium to its historical average. But UBS is saying that this valuation metric does not have enough relevance now that BSE has revamped its business model completely. So this valuation multiple premium has less relevance for the stock going forward, and so it's a 37% upside that the stock is UBS is projecting on BSE. The stock not doing much today, still a percent higher, but has corrected significantly from the top.
Thank you so much, Hormaz, for taking us through what exactly is transpiring as far as the listed stock BSE is concerned, not the exchange, which is generally in focus. We also have to keep in mind that the stock is in the F&O band, right? So you cannot take fresh F&O positions. You can only square off existing positions that you have. But the other stock in radar is SpiceJet. It's in focus after promoter Ajay Singh sells 1.15 crore shares via block deals. Sudarshan joins in to tell us more and what exactly could be the reason for this particular stake sale.
So last Friday, SpiceJet's one of the promoters, Ajay Singh, who is also CMD, has sold nearly 1% stake via block deals, and that was for worth rupees 52 crore at a price of rupees 45.34 per share. Now today there is another announcement. So basically it has two promoters, Spice Health and CMD Ajay Singh. Now Spice Health has certain warrants of 13.34 crore shares. Now SpiceJet has announced that Spice Health will convert those warrants into equity shares. Now to fund those certain part of warrants, CMD Ajay Singh will be selling 3.14 crore shares to fund that conversion, and after that promoter stake will increase to more than 33% from current holding of around 29%. It's a little more than 29%. But if you look at the stock performance today also, it's like almost flat. In 2025 it's down almost 20%, and if you look its performance against the peers, look at the market share. It has been losing the market share, whereas Indigo has been gaining the market share. Last month, for the month of January, its market share was around 3.2%, which is down almost 250 basis points year on year if you compare against January of 2024. So, but today's announcement is largely positive because at the end of the day, the money will come in the company, and the total money that will be infused is around rupees 300 crore. So, but stock performance today also, it's almost flat.
Indeed. So it's been in the news is SpiceJet selling shares, now increasing stake as well. Now, earlier today, we also spoke to Sanjeev Asthana, who is the CEO at Patanjali Foods. Now, he expects margin expansion to continue for the palm oil plantation business. Listening to what he had to say.
We are clearly witnessing some bit of slowdown in the imports in terms of volume terms. That is more than made up by the oil inflation that we witnessed. But broadly, for the year, we are pretty confident of still meeting between 2 and 4% of growth target on the edible oil volume. Pretty confident about exceeding 4% plus of EBITDA margin on the edible oil side. On the FMCG regular businesses of foods and non-food, there is some slowdown we see in the urban area, so that continues. But broadly, we are pretty much within the ballpark range of 8 to 10% target that we are on the food side. The HPC business is still integrating. The first full quarter we'll see in this last fourth quarter now. And pretty much we are on course to achieve 15% growth on the HPC side next year. Every year, our EBITDA run rate, what used to be about 160, 170 crores, we are upwards of, somewhere around 220 crores odd we make as an EBITDA. So every year that is spiking up. But the big growth in the EBITDA and the contribution to the revenue shall happen maybe in 3 years' time, when all the plantation that momentum that we have of last 2 years, I think will start to fruit. So pretty much from 28, 29 onwards, you will see a big expansion. And that the estimation is broadly that, if the run rate of our targeted sort of plantation size, the margin expansion that we expect to happen. So we should pretty much be nearly 3 times of where we are today in 4 years' time.
Well, that's a very interesting conversation we had earlier today with the management of Patanjali Foods. But with that, it's all the time we have on this edition on Midcap Radar from the entire team. Thank you very much for watching. Your stocks when we return.
I thought, I should leave. I should go back to India. We will figure out what is it that we will do. There was no idea for free will. So I came. Rahul also left at the same time. Then we spent almost a month or two to figure out, okay, now what next? So it always started from the family, then solving some, consumer problems.
The business plan came later. First,
Always.
was about how do we ensure that we're in the
That
same...
has always been the priority. What you see in front of the label is very different than what is on the back of the label.
And then very different from what's actually inside the bottle.
Exactly. I guess so far we are in some 2,000 stores. In next 2 years, we can easily target anywhere between 15 to 20,000, right? When you go deeper into any category, you also understand the good, bad, ugly side of it. It's a misconception, to be honest. I think the percentage of spend required for R&D eventually is much lesser that you need for your marketing. Investing in R&D is much better ROI than always doing it in marketing.